Welcome back. Well, let's focus on another company now. Pidilite is in focus in trade today. It is down despite reporting a good performance in Q4, although there was a miss on the EBITDA and profit. The company's internals suggest improvement in business. Mangalam, my co-anchor, did catch up with Bharat Puri, the MD of Pidilite Industries, to discuss in detail about the company's Q4 performance and began by asking him about the rural demand outlook. Listen in.
As far as rural demand is concerned, frankly, we have been the one company that has consistently actually not had a problem with rural demand. Whether it was, starting from the beginning of the year, we have consistently delivered over double-digit volume growth in rural, and that continues so. So I'm not sure, now do we expect a greater upsurge from there? Frankly, let the monsoon happen, let the stability return from a government, etc. point of view, so on, and we'll see. But if you look at the tailwinds that we have as a company, whether it is the upsurge in real estate and the upsurge in construction, whether it's the increased government spending on infrastructure, whether it is the consumer attitude towards homes and the investment in homes, frankly, we're in a good position. And if you look at our, consolidated result for the full year, not just one quarter, we have consistently guided and said our objective is double-digit volume growth at a margin of 20 to 24%. Well, we have delivered double-digit volume growth and underlying volume growth, mind you, where tonnage volume growths are obviously much higher, but then that doesn't take into account mix. And we think underlying volume growth is a far better indicator of performance than is total volume growth. Having said that, and we also said that we will be in a 20 to 24% range on EBITDA margins, we're at 23%. So at overall, frankly, we're quite satisfied with the year. We're quite optimistic over the prospects. We may have some minor disruptions in the next 1 or 2 months. This is a very long election. Elections always cause some amount of disruption because of movement of people, logistics, so on and so forth. But frankly, all of that is temporary. If you ask me, are you confident on the prospects of the year? Absolutely, yes.
All right. So, let's talk about the margin bit a little bit more, because while your gross margins are at the higher end of the range or the highest that they've been in the last many quarters, your EBITDA margins are still at the lower end of the range, at closer to 20% for the fourth quarter. So what one needs to understand is that this increase in expenses that have taken place recently, is this structural in nature, or is it just strategic because you have to boost the demand?
See, we've always repeatedly said that we do not manage margin by quarter. If you look at my third quarter margin, it was 25%. At that point of time, everybody wanted to know whether this will continue. And we said, no, please stick to our guidance. On an annual basis, we will be at 20 to 24%. In the fourth quarter, we've obviously invested behind our brands. We've invested behind a set of route to market initiatives. So it's not a structural piece, but overall, we're clear that, listen, we manage our margin in a band and our products command a certain price premium. We don't let it go above that. We would rather reinvest for greater volume growth. And therefore, if you ask us, our mantra remains unchanged. Our mantra is profitable volume growth.
All right. So you've been pretty clear on the EBITDA margin front. What about gross margins? Are they at the higher end of the range? Should we see a little more increase from here? Or maybe they've stabilized after the kind of decline that we've seen in input prices?
I think we're now largely stable. We're seeing input prices have bottomed out clearly. In fact, we're seeing the first signs of inflation, but very minor, and that's normal. Some raw material price will go up, some raw material price will go down. I think, barring any black swan events these days, the greater fear is geopolitics rather than anything else. But at least for the first 6 months, it appears that raw material prices will remain stable, will remain moderated as they are. Post that, frankly, both you and me don't know. We'll discuss next quarter.
All right, we'll discuss that next quarter. What about waterproofing? You've been the pioneer here, and you've also had a lot of mind share. Do you still have the same market share? Because I spoke to Asian Paints a couple of months ago, and they said that they are bigger than even you in the waterproofing space. So is your edge still intact?
See, as far as we're concerned, we look at our growths. We look at, everybody these days tends to define waterproofing in different fashions, so on and so forth. The paint companies tend to add their exterior paints to waterproofing, so on. Frankly, as far as we're concerned, there is a massive runway for growth as far as waterproofing is concerned. Even today, it's 4 out of 10 homes in India that are doing any form of waterproofing. Are we growing strong double-digit growth in waterproofing? The answer is yes. Is our brand the most salient brand? The answer is yes. Do others have good growth? Frankly, that's their lookout. As far as we're concerned, as long as we're satisfying our consumers and satisfying hopefully more of them on a consistent basis, we're not worried at all.
All right, so your core is going good, your innovations are going well. What proportion of your sales currently comes in from products and categories that have been launched in the last 3 years or so, and what rate is that likely to grow?
See, we're clear that for Pidilite, innovation is a very strong driver of growth. We're a company that's known for our innovation in product, innovation in communication, advertising, so on. So across all of our divisions, we've got a whole range of new products. There's a new variant of Fevicol by the Fevicol division. There are a whole set of new products in waterproofing. The art materials division has a new set of products. If you look at Fevikwik, we've expanded the full Fevikwik range now. We've got Fevikwik variants starting from 5 rupees to 75 rupees. So as far as innovation is concerned, we're always clear that 1/3 of our growth must come out of innovation. We are a company, products launched in the last 3 years, and we're now very close to that number.
All right. Any other parameters for you other than, just increased offtake to gauge sentiment on the market? Is there any movement there?
See, what we are finding is clearly there is a tailwind as far as real estate is concerned. When the real estate cycle turns, the good thing is it tends to turn for, between a 5 and 10 year period. And as a home improvement company, we will see the real benefits in what I say T+2 and T+3. Starting from construction, year 2 and year 3 is when our products come into full use. And we are seeing that now beginning to play out. Clearly, the government's push on infrastructure also helps our sector fully. And the consumer attitudes towards the home. What we are doing clearly is 4 things. A, obviously, making sure our supply chain is geared for the future. You would see this year, again, we've opened 10 new plants this year. We still have some other new ones under consideration, which we will talk about next year. As far as distribution is concerned, we've added 40,000 new villages to our direct coverage. I now have 13,000. When we talk of rural, we've never said rural is the problem because we've consistently invested ahead of the curve in rural. We now have 13,000 Pidilite Ki Duniyas, our small retail stores in villages between 5 and 10,000. So we're consistently investing behind growth. As we find the margin elbow room, our objective is go back to double-digit growth. Fortunately, we're now back there. If we look at our volume growth, Mangalam over a 4-year period, we have a double-digit CAGR over 4 years. Frankly, that's what, in a sense, we've added pretty much 1 customer to every 2 customers that we already had. And I think that's our greatest indicator of success.
All right, and final question then. The big change that has happened between last time and now when we spoke, you appointed Sudhanshu Vats as the designate MD, and you've also onboarded Kavinder Singh as the joint MD designate. Why the need for 2, and what's the mandate given to them?
See, very clearly, as far as Pidilite is concerned, you've seen we've been fortunate to grow at a very healthy pace. We're also a company that is across a large number of sectors. We now have 37 to 39 verticals. And we felt that the management of the organization, therefore now needs a newer structure. So we have a managing director, we have a joint managing director, we obviously have the board. So this is, again, you will see Pidilite has been one of the few companies we've prepared for succession much before. Sudhanshu was on board 2 years earlier. We've already, outlined a succession plan, which will actually, in a sense, play out from April next year. This is really just being future ready and hopefully future proof.
Future ready and future proof. That's the word coming in from Pidilite's Bharat Puri. I mean, the stock can do what it has, but in the past, it's been a big wealth creator, and the management hasn't wavered away from their long-term guidance as well, which is double-digit volume growth with margins between 20 to 24%. The only difference this time around could be some sort of disruption in the very near future with people movement during the elections. So let's see how the second half, the latter part of this year does play out with a lot of the tailwinds that Mr. Puri did speak about. We take a short break. As we do that, here's an announcement that we'd like to share with all of you. Our upcoming live personal finance webinar, CNBC-TV18 Accelerate, will feature none other than top market expert Nilesh Shah, the MD of Kotak Mahindra AMC, who'll answer all your questions on managing money. Also conduct a special masterclass on what not to do or the mistakes to avoid when it comes to financials. CNBC-TV18 Accelerate Personal Finance Handbook with Sonia Shenoy will also feature 3 well-known experts to deep dive into everything you need to know to master your finances and learn how to grow your wealth. Don't miss this chance. Join us on the 11th of May, 9 a.m.